We'll start with a little bit of housekeeping. If you have any questions throughout the discussion, please enter them into the QA function at the bottom on your Zoom screen. I'm looking forward to this very interesting discussion about trends going on in the RIA world these days. We're going to focus today on the topic of specialization. This is something that we've seen really in this broad movement towards teams among financial advisors, among investment advisors, that more and more teams are specializing or having individuals specialize. So we have an all-star panel today, and I'm really looking forward to this discussion. I think it's going to be something new. We've got some excellent panelists. Let's go ahead and have all panelists introduce themselves, tell us where you work, and then we'll begin the discussion. We'll start with you, Heather.
Great, thank you. Good afternoon, everyone, or good morning, perhaps, depending on where in the country you are. I'm Heather Welsh with Sequoia Financial Group. I'm one of our vice presidents and serve as the wealth planning department leader there, typically based in our Akron, Ohio headquarters, but today coming to you from our downtown Cleveland location.
All right. I'm an Ohioan, by the way. So good to see other Ohioans on the call. Scott, we won't hold it against you if you're not an Ohioan or a Buckeye.
I am in beautiful Wilmington, North Carolina. I'm Scott Winslow, and I'm managing partner of Nabel Winslow Investments, and glad to be here. We opened our firm up 9 years ago, and we are investment advisor representatives with Cetera Advisors.
Okay. Terry, why don't you tell us a little bit about yourself?
Hello, everybody. I'm Terry Parham Jr., coming to you from Los Angeles, California. Our office location is actually in California, Maryland. That's our headquarters. I'm there maybe 10% of the time and 90% of the time on the West Coast. So I'm excited to speak with you today. And I am the managing partner and also one of the 4 founders of Innovative Wealth Building, a completely independent RIA.
All right. Well, thank you, Terry. Great to have everybody here. Let's start with you, Heather. I know you work for a large RIA firm, and that's really been one of the most significant trends that we've seen over the last decade is this consolidation among RIA firms. How has consolidation led to increasing specialization? And in your firm, how do you see specialization going forward and the benefits of specialization?
I think that, with the growth that I've seen at Sequoia, it really has afforded us the opportunity for specialization. Our firm was founded in 1991 by our current president and CEO, Tom Haunt. And I've been with the firm for 15 years now. We had about 20 employees when I started my career here, and now we're closing in on 190. So, going from wearing many hats to being able to drill down and really develop specialization has been an incredible benefit of our continued growth. We have advisors who are able to focus on specific client segments. So, some advisors that may be focusing primarily on working with clients of net worth 2 million and under, others that focus on high net worth clients in the 25 million and over space, because your advanced estate planning conversation is often very different than your social security strategy conversation. We have built out an asset management department and specialization within that, where you may have some people focused on research, some on portfolio management, some on training. And for me, in my role, I sit on our wealth planning team, and we are a group of 6 individuals who are really the technical planning experts for the firm. We're serving all of our advisors across all of our geographies and all of our client segments. And within the team, we've been able to build out sub-specializations. So we have wealth planning department team members who have the RICP designation. We have a CPA who's part of the team, an accredited estate planner, those who have gone into their master's through the college. So it's really been incredible to be able to dig in and specialize further to focus on our clients' complex planning needs and give them the service that they need as we continue to grow.
I really see that as a interesting future model, this sort of consolidation of expertise. Not everybody has the same interests or expertise in this profession, and being able to combine different people together who are each deep specialists. It's very rare to have someone who has both the client-facing skills and also a deep knowledge of all the different aspects of financial planning for all the range of different client types. Because of course, as you mentioned, estate planning expertise, that is a whole subfield that requires lots of in-depth knowledge to be able to do technically. So Scott, you're more of a boutique specialist. You have to have that broad range of knowledge and you have to be client-facing at the same time.
Right. So our practice is very different. We sometimes think we look like a small law firm almost. We're a boutique. There's 3 partners, 2 managing partners, and 5 advisors, and we specialize in retirement income planning mostly, but that is largely due to our target market. When you look at Wilmington, North Carolina, we're not as big of a metropolitan area as Cleveland, like where Heather is at, and so we get a lot of what we call halfbacks. A lot of our clients are from the Northeast. They think they want to retire in Florida. They stop in Wilmington or Charleston and say, hey, we like our options. And they come back and stay. And so how we engage with our clients is we have a deep background. We believe in the designations that like the American College provides. We're real high on the RICP, and we're requiring the partners at our firm to get the RICP because that's 80% of what we do. But we're probably not going to be a 100 advisor firm at Nobel Winslow. We may grow out to be 15, and we're going to focus very heavily on all things retirement, elder care, portfolio management, tax, and income planning, and systematic withdrawals versus all those things. And so that's what you're going to see at Nobel Winslow. It's going to be a family. It helps that my background was in advanced markets, and my partner was an executive at a broker dealer, and we went in production and then we lifted out. And so we started 9 years, and it's kind of the family feel versus more of the large conglomerate RIA.
Yeah, Scott, if you think about where the market really has moved over the last few years, I think it's followed some demographic trends. The peak of the baby boom was 1958 to 1961. Those early boomers or younger boomers are between 61 and 64 years old right now. And they are really the first generation that's going to have to rely entirely on their defined contribution saving to fund their lifestyle. So developing that kind of expertise to put together an in-depth retirement plan, I think that you get a base of knowledge when you get a foundational designation like the CHFC, like the CFP, but it is not necessarily enough to be able to really specialize in that area, to be able to answer a range of questions and be able to handle all of the client situations that you'll see when you're doing retirement planning. It is an incredibly unique it's a body of knowledge. And Terry, tell me a little bit. Now, you've got a fast growing practice and you've truly decided to specialize, and that's really paid out well for you.
Oh, yeah. Thank you very much. It's so impressive to hear from Heather and Scott, RIAs that have been around for 9 years or 30 plus years. We've been around for just over a year. So we're truly the neophytes. We're still in that crawl stage before we can walk and run. But it's been an exciting journey so far, going from $0 under management to north of 300 million. Lots of work put in before forming our RIA, but it's been a steep learning curve and a lot of fun. As far as specialization, there's so much value in that because as a new advisor, you're a mile wide and an inch deep. So you know a whole lot about you know a little bit about a whole lot of things, but truly the firms that deliver the most value are the ones that drill deep. And not coincidentally, the specialist, be that a doctor, a dentist, or any profession, a specialist typically ends up making a lot more money and providing more value than a generalist. So we really do, like Scott's firm, specialize in retirement income planning. We do a lot of work with business owners. I live in LA, and it seems like every person in LA either acts part-time, has a small business, is a musician on the weekends. So we're developing some specialized expertise there. But for us, it started with working with a whole lot of people, figuring out where we could deliver massive value, and then really investing the time and the effort to dig deeper. And for me, a lot of that was knowledge that I learned through the American College. I think I have 5 designations down and a few more to go. So it's been a great ride, and looking forward to sharing some things and looking forward to learning from my fellow panelists during our conversation today.
Terry, that's a great analogy, the comparison of financial planning with medicine or even with law. Because financial planning is a relatively young profession compared to medicine, compared to law. But as both of those professions have evolved, they really have evolved to favor specialization. So in medicine, you're right, you end up making more money if you specialize in a specific area as opposed to being a general practitioner. If you're an attorney, if you just hang out a shingle and you're a generalist, you're probably not going to be as successful as if you specialize in a specific area. So I think what you're seeing is that as this profession matures, there is an increasing movement to resemble some of those other more mature professions like medicine and law, where you see greater amounts of specialization. And as I mentioned before, retirement planning seems to be a big growth field for specialization in financial planning, again, potentially because of demographics. Scott, you really have decided to focus on retirement planning. Tell me a little bit about what motivated you to make that decision and how it's affected your business.
Well, we were market-based. So when we enjoy all things finance, we came back from a lot of different backgrounds in our firm. But at the end of the day, when you look at our market and you try to be a business owner versus working for someone, our market here in Wilmington, North Carolina is retirees are moving here at a rapid pace. And all you gotta do is ask a couple of real estate agents because they can't find enough houses. The housing market here is booming. It really hasn't been affected by any of this recent stuff. So we started realizing like we wanted to be all things retirement. So we went and got all of our RICP designations. So when we go to elder care firms or corporate law firms, because retirement is for business owners, it is for the person who worked for a big company up in the Northeast and retired here. We wanted to be able to ask the questions, but also put the math, an art and a science behind what we do. I'll give you a great example is in portfolio management. I think there was an advertisement from the American College. It says, Harry, not Harvard. That stuck with us. We use that all the time. Investing for retirement is mapping the future liabilities, whereas for foundations, it's more metrics based. And so we decided to really go all in on that thought process and focus on our client. Our client's going to have $500,000 to $10 million in assets under management typically, and put the plan in place, follow it, try to use what you like to talk about a lot, behavioral finance, to keep them in the plan to where short-term liabilities for short-term investments, long-term liabilities, long-term investments. You're going to see that when you come to Nobel Winslow. That's how we're specializing. That's how we're talking to clients. And a lot of that came from our education at the American College and taking classes there.
Tell me about some situations that you've had with clients where having that specialized knowledge in your mind when they asked a complex question really set you aside as an expert.
Well, when you take a lot of classes and have a lot of experience, you have formal. So you have a formal process and thought process that you'll get from thought leaders like you and Dr. Fowl from the graduate school or from the RICP program or any of the other designation programs. When people ask a question, you have an outline form in your mind, how you're going to answer it to address it. You've been exposed to a lot of things. And so the clients know immediately. We always say clients can smell inexperience. They can sense it, they know. And the more that you're a study and you're a student of this business, because we're always learning, lifetime learning in this is so important. If you don't keep up with your credentials and your knowledge bases, you will fall behind, and it won't matter if you have the designations behind your name because you won't know what's going on. And so when I'm sitting there in front of a client and they have a really tough question, a client asked me, trying to think a really tough question the other day, it wasn't even relevant, but the answer got us the client. And it was definitely from things like our classwork from the American College and our continuing education, which is just as important.
You know, I've actually heard that from students that occasionally before they had specialized education, a client would be able to Google something ahead of time and they'd ask them a stumper and they wouldn't necessarily have the answer
Right.
at the tip of their tongue. But with an advanced designation, now they have an answer for all the Googlers' questions, that no matter what they ask, they've got something that they've been exposed to. And really, I think that something like retirement planning, you mentioned liability-based approach. You know, it's not the same as accumulation. I think a lot of times when we think about retirement planning, we think about tax rules that are associated with different types of sheltered savings accounts, but it really is so much more than that. I mean, everything from Social Security claiming to understanding Medicare rules to understanding long-term care things. This is there's so much to be learned. There's so much that I don't know about this topic. I'm constantly learning things, but it is, I think, far more complex than some people might originally imagine.
And let
Now,
me add one thing to that.
Yeah.
When you're sitting down in front of really sharp CPAs and attorneys that are thought leaders or experts in their field, and you can answer a question or give them a different viewpoint on something they may already know, it goes a long way to building rapport and getting team-based planning moving forward with you and their clients and your clients with them.
Yeah, and one of the things I've heard from clients who have worked with advisors that have specialized in retirement income planning is sitting down with a client and asking them questions about how they want to spend their money, how they want to live, using a more goal-based process instead of what is often called an account-based process. So oftentimes people think that it's your job to manage the stocks and bonds and to figure out how much to withdraw from the portfolio every year. But instead, if you use a goal-based process where you begin with those liabilities and then you create a plan around how the client actually wants to live, that makes them happier. And that leads to more referrals. It leads to more satisfied, sticky clients. Heather, talk to me a little bit about what specialization means for you in a larger firm. We've got multiple specialists in different areas.
Yeah, our founder likes to talk about the idea of subjugate your ego for the benefit of the client. So when we have people who are able to subspecialize, we don't take the framework of, well, this is my client, this is your client. It's let's get the best minds together to come up with the best possible solution. So if somebody has a nuanced question in retirement income planning, they know they can pick up the phone and call the individuals who hold the RICP designation, or some nuanced insurance question, let's pick up the phone and call the CLU. We're getting into nuanced estate planning, call our AEP, so that everybody can really come together with those best thoughts to have that really collaborative approach of your subspecialists.
Heather, I'll tell you a secret. I'm supposed to be an expert in retirement income planning, but I am constantly emailing or phoning Steve Parrish, one of our faculty members, who's an expert in all issues related to tax planning. And I will ask him, some arcane question about tax planning that I didn't know anything about. It really is, it's impossible to know everything about every subject, isn't it?
It truly is. And as much as we, continue to stay on top of our continuing education and monitoring new legislation, proposed legislation, there's so many nuances. No one person can know everything. That, bringing those specialists together really has a significant impact.
Now let's talk for a moment, Heather, about retirement planning. What are the different types of clients and the different kind of issues that you deal with when you put together a retirement plan? Because it's very different. I think between a high net worth client, Phil Cabetta, who used to be a faculty member here at the college, would say that you have two kinds of clients. You have one who has to plan for abundance and one who has to plan for scarcity. And that really takes a different approach, doesn't it?
It does. And we've seen clients at both ends of the spectrum, as well as, those in between. So certainly we want to answer the foundational question of financial independence. And we generally take the approach of, assuming that you're maintaining a fairly consistent lifestyle. We can go into the go-go, the slow-go, the no-go years if that's something that, a client or advisor wants to see. But assuming that you're probably looking to maintain a fairly consistent lifestyle, how do things project out? If they're looking great, what other goals might you have? Are you curious about that second home? Are you interested in gifting to your children? Are you interested in gifting to charity? Do you want to retire a little bit sooner? I know COVID changed the landscape for many people where there's different restrictions or things that it may be, I thought I would go another few years. Am I okay to turn in those papers tomorrow? If we have the outcome that isn't quite as strong as we would hope for, what are the levers that we can pull? Is somebody willing to delay retirement a few years? Are they willing to adjust spending, downsize their home? Are there different things that we can do with their allocation or strategies that we can look at, from an income perspective? When we get into the high net worth space, certainly we want to confirm financial independence before we look at, giving away significant assets to charity or family. But once we know that that foundation is there, then we can really start to look at what are the different tools and techniques that fit for their legacy, for what they are trying to accomplish. Because we might come to the table with a great charitable planning strategy that saves them a lot of income and estate taxes, but if they're not philanthropically minded, it's not something that's fit for them. So it's a function of, know your client, know what to lead with, hopefully getting in front of some of those events for them. We work with a lot of business owner clients. So if they're getting ready to sell their business, are there opportunities to introduce philanthropic strategies ahead of time? Make that gift of those business interests to the donor advised funds, and working with those organizations that are familiar with that level of complex gifting, that we can get these strategies into place at the appropriate times for our clients.
Now, Terry, you've gone in a slightly different direction. You have chosen to specialize on a group of relatively homogenous clients. Isn't that right? That's been one of your keys to success, is that you're you have a specific type of client and you rely mainly on referrals at this point.
We do. So I mentioned earlier that we have 4 advisors. One in particular, Warren, has worked in a certain area geographically for 20 years, and he's created this sort of gravity where when someone becomes a client, they refer their sister and their brother and their cousin, whether they like them or not, they refer them, and their mom and their kids. So then there's just this continual wave of referrals, and it's the craziest thing. Today, our website got another email saying, hey, I'd like to schedule an introductory meeting. So in that area of Southern Maryland where our office is located, it's like a self-licking ice cream cone. There's just referrals that are just coming and coming and coming. Over here in LA, we've started a similar thing. My wife had the great idea to buy a hot tub, and I thought, this is a terrible expense. Why are we buying a hot tub? But in that hot tub, her brother has had conversations that have led to millions of dollars under management for us, and lots of referrals where one person came, then they referred their brother, and then their mom, and then their mom's best friend. So it really, at the end of the day, for us is, where do we specialize and provide value to inspire people to want to share that value? And if it's a business owner, there's a lot of things that go with that. On the retirement income side, I've found that almost everybody is going to have questions and care about Social Security. Almost everybody is going to care about and have questions about Medicare. But probably surprisingly, a lot of advisors may not know as much about those programs as they probably would self-profess that they should. So by just getting really, really, really smart on Social Security, Medicare, some of the basic things that people are really going to have questions about, tax-efficient retirement planning, benefits, and the whole package for small business owners, we've been able to keep that wheel of referrals going. And then we supplement that with certain events that we do for client appreciation. We do a monthly educational webinar that's open to the public. Our social media team is phenomenal. They're dripping out content in 1 and 2 minute videos. And it's a whole team effort for the purpose of serving our clients and just serving the greater population with financial information to help them make great decisions.
Now, by the way, I love the idea of using a hot tub as a deductible expense for your business. That sounds very attractive to me. Heather, talk to me a little bit more about the small business planning that you do at your firm. What sort of specialized knowledge does that require? And where have you tried to dig a little bit deeper to be able to provide a foundation of knowledge for small business owners? Because really, there's a whole range of small business planning topics, isn't there?
There certainly is. And when you get into the small business market, obviously understanding the taxation of the different types of entities. You may have somebody who's thinking about forming a business. Even though we are not accountants, having that background of understanding what the different taxation of the entity structures might entail, getting them to think about what is their ultimate succession plan. It's a tough conversation. People don't like to think about when they're not around to run their business. It's not something that people sit down to the dinner table on a frequent basis and say, well, what if I, die, become disabled, or we get divorced? It's not really a friendly discussion, but getting people to think about how can you leave your family in the best possible position, because one way or another, you'll be transitioning this business voluntarily or involuntarily. While you're still running it, how do we make sure that you're retaining your key people, getting into the executive compensation and retention discussion, helping them understand the benefits that they may consider offering for their employees, whether that's, insurance side of things or the retirement plan side, introducing the idea of different qualified retirement plans. You can start with, things that are very straightforward, the SEP IRA for your self-employed individual who's got their consulting practice, or, in Terry's case, that everybody's the actor, the musician, they're all kind of got their different gigs going on, all the way up to maybe we're implementing a full 401k plan, pair that with a cash balance plan. So there's a lot that goes into that. And, to our earlier conversation of nobody can know everything about all of those. So having, different team members that can dig into the different areas a bit deeper, really can best serve those business owners.
Yeah, I mean, it almost seems like every 10 years, business owner knowledge changes, doesn't it? You have different forms of compensation that become very popular. In the past, we've seen this sort of evolution of knowledge in the area of providing advice for business owners. We've had a lot of tax changes over the last couple of years that have also changed up many of the strategies for small business owners. Terry, I want you to talk a little bit, I think especially about younger clients. What are some unusual cases that you're seeing that require specialized knowledge? I'm thinking in terms of companies that are working, or people who are working in tech or as in independent contractors. Where do you see gaps in knowledge among most advisors?
Oh, goodness. It really is specific to the types of people you're working with. The main thing that I see is that when you run a business and you run a successful business, it's because you develop an expertise and a passion for that thing. Unfortunately, when you're so focused on your business, you sometimes don't plan for some of the financial things that you may need to plan for. That could be health insurance related. That could be business succession way down the line related. That could be putting into your own retirement plan, as Heather mentioned, some type of qualified plan. The other day, just yesterday, I talked to a business owner. They have an S corporation, and they asked a simple question. And it's interesting, even if they have an accountant, sometimes they really don't know what the rules are or what the implications are of sending money from their business account to themselves. The questions that I get sometimes are interesting. I'll see a business owner with $90,000 in their business account and $30,000 of credit card debt personally, and they're the only person in the business, but they're afraid to move it from here to here to pay off that high interest debt because they think they're not allowed to. So the types of things we see are pretty incredible. And for me, it depends. We have business owners that are close to or already retired. Today, I talked to a business owner who's 25. He has $200,000 in the bank, and he says, Terry, what do I need to do? And there's this list of things we need to do. And in his case, he's asking me about cryptocurrency and all sorts of other things. So it's really interesting. We have to make sure we're smart enough to stay inside of our box of where we're experts. But I've just found that, of course, there's certain baseline things that are probably helpful for most people. But personally, I've taken the time to try to develop in some of these other nuanced areas where if someone does ask me about X, I can provide information. Also, because I'm the CFO of Innovative Wealth Building. I'm the one that helps make sure our taxes get filed. So I've had to get a lot smarter on a lot of stuff I conceptually learned about in these books. But now that I've lived it and I've actually been in QuickBooks, I'm like, I get it now. I see why you hire an accountant.
So, Terry, it sounds like you've done something right. What would you tell someone who was in your type of position, who was relatively young in this field? What decisions did you make along the way that you think were the most important ones to your success in your firm?
Without a doubt, you've got to work your butt off. None of this is given. Everything in this industry is earned. I almost didn't become a financial advisor because I was afraid of commissions. I was afraid of compensation based off of results. And one of my managers said, in this industry, you're going to get paid what you're worth. You go out and help a lot of people, you provide a lot of value, and you'll make plenty of money. And I was 20 years old as an intern when he told me that. and I took it to heart. So no kidding, I can feel confident sitting across from someone who's 85 years old because I know I've busted my butt day in and day out, hours and hours till 3 in the morning if needed, to acquire knowledge that has given me the ability to feel confident. And then also I've gotten up to the plate and I've struck out a billion times. So I've learned how to correct my swing a little bit so that I can help people and find success. So I'd say number one, you got to have a passion, you got to work your butt off. Number two, you need to invest your time in things that are going to be profitable. For me, that was education. And when I go on runs, which I was training for a marathon a couple of years ago, I ran a lot. I'm listening to podcasts about financial stuff. I'm getting my mind right with motivation. Shout out to Eric Thomas, the hip hop preacher, PhD. And for me as well, some personal and spiritual things is also. So it's this huge, list of things that you got to do. But if it's important, you'll work your butt off and you can make it happen.
Yeah, Scott, let's go back to you. And I want to first begin by talking about how you deal with the complexity of working with people who have their own business when they're doing retirement planning. And then maybe tell me a little bit about how you've managed to achieve success through specialization. What are some of the steps that you've taken that you think you would suggest to other advisors?
It comes down to lifetime learning to me. You have to really build a knowledge bank over the years. That goes from taking really hard classes at the American College and getting credentialed and stack credentials, but it also is about getting up every morning and understanding what the headlines are for the economy, the stock market, and tax. One thing I would say about young advisors is, and many advisors in our industry is they think that, hey, the CPA's got it handled. But if you're working with these different businesses, whether they're a startup that's not going to be a huge business that's transferable, they haven't worked their way up to a EBITDA that matters, where they can get private equity in different transactions. Quite simply, one of the things I think advisors struggle with is understanding cost basis and how plans that you put in place affect the cost basis of the business, whether it's an S Corp or C Corp. So what we've done is over the years, I've educated myself to really understand maybe it's like Terry said, an inch wide, but a mile deep, but things that we do affect the 1040. They affect the cost basis of every business owner that we have, and understanding that. And you give yourself a lot of credibility with CPAs and attorneys and our corporate attorneys when you can go in and explain what you've done and how it's not going to affect, or why you're planning it. So that's the main thing we've worked on, is educating ourselves on tax. We work all things retirement. So exit is a really big deal. We work with business consultants, mergers and acquisition specialists, private equity with our clients, building those relationships and then understanding what they're trying to accomplish and what the client's trying to accomplish, and come out with a better outcome. So you're going to see it in the Bell Winslow team building. Get all the professionals on the board, get the best team possible, and build that up so that the client can look around the table and say, hey, I've got this covered. And one thing I've learned about working with CPAs is that they really like immediate deductions, but when you start talking about how it affects different things, they're on board. And then next thing you know, you're more in play with them, and you're getting more referrals and things of that nature. But yeah, we have a lot of different clients like that, where it's small business. They're just trying to make a living to the massive exit strategies. And those clients are all different, but they all have corporations, and they all have a cost basis planning that things like income tax in a graduate school is going to teach you how to do that.
So it sounds like demonstrated expertise is a way of getting CPAs and attorneys to trust you. How did you originally make some of those inroads to be able to get referrals from other professionals?
Well, just so you know, I spent years making mistakes. And one of the biggest mistakes is like, I want to be the best financial advisor ever when I was 21 years old. I'm going to study like crazy. And so the first thing I wanted to go in there is demonstrate what I knew. Well, when I changed tactics on that and I started trying to figure out what they were trying to implement and how we could help them, the floodgates opened. Like, okay, so Bell Winslow is a competent firm in all these areas. We have a problem here, whether it's qualified retirement plans and getting implemented and getting the information back to us and getting communication. That was a big one with a lot of CPAs. Like, they really like qualified retirement plans. And so we made sure that we started like listening to each CPA firm we worked with and figuring out what they're trying to implement and immediately like addressing them like they're our client. If you came into Nobel Winslow and asked who's your client, they would probably say CPAs, corporate attorneys, and elder care and estate planning attorneys. They're our clients, along with all the mass affluents and emerging affluents. That's how we positioned ourselves.
So it's not just about joining the Rotary and brushing elbows with other professionals. It's about really doing your homework and demonstrating your capabilities that are independent of them. So,
that stuff's good. Civic clubs are great. You meet a lot of people, but I always tell my partners and the newer people when they come in, if we're recruiting them, is like, if you go join a board, your alumni board at a university you did undergraduate at, or the local heart association or whatever, and you don't perform like a professional, everyone's watching. If it's just a resume builder, you're going to really lose a lot of capital with these people. If you go and perform like a business person, they say, hey, look, you're a real legitimate business person. They're going to be more interested in having coffee and building a relationship.
I think that there is this attitude among some folks that you fake it until you make it, that
Right.
you pretend that you know what you're doing. But the reality is that there are a lot of people who have made big investments in their knowledge, and they have clients that they care about, and they can smell a lack of capability. They can tell that you don't know what you're talking about. And as soon as you let that slip, then no one is going to recommend a client to you because they don't trust their clients to you, because it's their reputation as well. If they make a recommendation and it doesn't turn out to work well for the client, then it's going to come back to them. So I think that, there is a misunderstanding, I think, sometimes among younger advisors, that you take on every opportunity that you can. But I think in many cases, you're better off acknowledging what you don't know and specializing, focusing on the thing that you're good at. And then you can develop a reputation that can allow you to get those referrals as opposed to just being in the right place at the right time.
I agree completely.
Heather, let's talk a little bit about that advanced knowledge. Now, you're at a firm that has a team or has groups of teams. How do they keep up on all of the different aspects of financial planning? Like, what do you do as a firm to encourage people to stay current on all of the different tax laws and all of the different subjects related to financial planning?
Yeah, we go about it in several different ways. We do some internal programming. For example, we host a monthly coffee talk for our advisors where we'll dig into some type of technical topic, generally presented by our wealth planning team or our asset management team, leaving time for Q&A, open discussion, hearing advisors talking with one another about what they're really seeing in the field, the types of questions that they're getting, and the solutions that they're proposing, so we can really have that shared dynamic conversation. And then pairing that obviously with external learning. So depending on people's individual specializations and roles, some of them may be part of local professional organizations. Maybe they're part of their local estate planning council in their geography, FPA, FSP, a variety of different groups to keep current with their continuing education. People at various stages pursuing different credentials. I have a few team members right now who are actively working on their CFP designation, a couple team members who just passed the exam a couple weeks ago, which is very exciting. The business owner client base, some that are pursuing exit planning focused designations. One of our core values at Sequoia is passion, and we really think about that in the context of the relentless pursuit of your full potential. So we're always striving to make sure that we're keeping current, pushing forward, learning more, because you can't just rest on your laurels. There's always going to be that next step, that next question. What got you here doesn't get you there. So it's a dynamic process.
I see that when I talk to financial advisors. I see the ones that are constantly open to new information, that ask me questions, that they don't presume that at some point they have enough knowledge. They realize that things are constantly evolving. And I think that passion for knowledge, it's such an important part of being a professional. It really is what knowledge, this is a science. Knowledge always changes from one year to the next. Not only is it tax laws that are changing, but it's also our understanding of what works and what doesn't work. Our understanding of human behavior is changing. And I think that being part of those professional organizations, that's a really important step, and taking them seriously and going to those conferences and listening to a range of different speakers. It's a way of staying fresh and thinking in new ways about some of these advanced planning topics. I mean, I'm constantly hearing about new planning techniques that I never thought of before. And I'm always, if I was an advisor, I would think it would be very exciting to be able to bring things new that are new to the table, and especially if you're part of a team, to show that you're constantly evolving and you're constantly on top of what's going on in that area. So where do you see this all evolving, this sort of consolidation of RIAs? Is there a point at which these large RIAs, where you do have specialists that are part of a team, do they get big enough, or do you see it as the trend is that they will continue to expand and get larger?
I see that it's likely that the consolidation in our industry will continue, but that, in my mind, affords opportunity for further specialization. You can really build out those teams. You can build out additional specialties. My department, as an example, when I started with the firm, it was a planning department of one. I joined the technical planning team, so then it was a department of two. We now have 6 full-time team members focused solely on serving our clients' planning needs. So I think as you grow, it gives you the opportunity to build out depth in those specializations. So you don't have to worry about, our department of one is on vacation and how are we going to get this done for somebody, because you can really have that deep bench.
Yeah. Terry, you strike me as one of those advisors that's constantly trying to learn more about your craft. What are you doing right now, especially when it comes to those advanced topics, things like advanced tax planning? What are you doing right now that you would recommend to other advisors?
I like to say that I personally have a AAA mindset. I want to exhaust all avenues, all available avenues. So personally, I subscribe to content from the American College. I subscribe to Kitsis. I subscribe to the Horse's Mouth. When I see a webinar or content, I'm going to be there, and I'm going to seek to learn something. Because if we just think about our capacity of knowledge today, and you just fast forward a week, if you don't learn something new, next week you know less, because we can only maintain so much stuff in our long-term memory, and stuff's just going to fall out. So for me, if you're not getting better, if you're not growing your knowledge, you're losing your knowledge. And if you're losing your knowledge, you're losing the ability to significantly impact people and stay current on the truths about money presently that are going to help move people forward. So when it comes to what I'm doing, I'm talking to accountants. I'm asking about their problems. I'm envisioning 5 or 10 years down the road how we can do some of these big things that Scott's doing, that Heather's doing. We use our resources. One of my buddies, he's a great advisor out of Texas. We had him pop on a Zoom meeting and teach us some stuff that he's really good at. And lo and behold, we started getting better at it. I use his language to talk to people every day. And it's one of my best friends that I just said, hey, dude, will you jump on the webinar and teach us some stuff? Within our team, my wife, Kenna, she's one of the financial planners. She's a CFP, CHFC. She has certain stuff she's super good at that she teaches the other 3 of us. Jennifer's a former federal employee. She has some knowledge that's specialized that she teaches us. So internally, we look to each other. Externally, the world is our oyster to subscribe to and to learn as much as we can. And then just everything in between. I think that almost anyone can learn something from everyone. We have a taco truck near our house. If I go to the taco truck and there's someone homeless there who's, unfortunately in that space, I could guarantee you if I have a conversation with that person, I'll learn something from them. And there are conversations I've had with such people that I remember today, and they've said something to me that stuck with me. So that's kind of my attitude. It's a game of numbers. It's a game of inches. I'm seeking an inch every opportunity that I can. And if I keep looking forward and finding those inches, I think that I'm going to, and that we're going to end up at our destination which of course is always moving. So we'll never get there.
One of the things that I see successful young advisors do is exactly what you described, which is talk to other successful advisors and ask them how they explain different concepts or different products or different strategies, because very often those more experienced advisors will have stories. And those stories are meant to build conviction in someone who doesn't have a deep level of expertise, but gets the concept once you explain it the right way. I've often said that stories are worth their weight in gold. And people, especially young advisors, oftentimes don't give enough thought to how to use stories and how to collect stories from other people and to build this bank of stories that they can use when they're dealing with clients. Terry, I just want to talk a little bit more about how you've become successful at focusing on a specific type of client. What were some of the things you did relatively early on that others could replicate? Because I think that's something that's unique to what you do. Instead of focusing on one area of expertise, you have your expertise that you invest in, but you also focus on a specific type of client. And I think that that's sort of a rich vein of potential business that a lot of people don't think about.
So over my career, that's changed in various different timeframes, and there's been various iterations. But when my career really took off, I was actually working with active duty military. And I got really good at speaking with active duty military. I found ways to share stories. I found visual ways to get them involved with the learning process and to help inspire them to move forward. And that's when my income and my success quadrupled seemingly overnight. And I went, wow, this is insane. So it really comes down to listening. I had to listen to what truly their concerns were, the things they struggled at, and find the things that they're really good at. And then once I was able to package those things up and find the recipe that worked and produced a good result, you're able to just do that over and over and over. And then when I actually moved from Texas to Washington, D.C., I was in a completely different market. I wasn't working with active duty military anymore. I was now working with people close to retirement. So I had to go through that same active listening process about their concerns, about finding where I can really provide value, and then really replicating that process again. So it's an ever-changing process, ever-changing way that we go about it. But at the end of the day, the way that I've been successful is I've had the privilege to work with more and more people by truly caring about the person across from me and doing anything within my power to provide value. And of course, to do that as transparently as possible. I don't think we've mentioned that explicitly, but no kidding. If you just do the right thing and people feel that your intent is to serve them, then this becomes pretty dang easy. My dad, when I first started, he had a bad experience with a financial professional back 30 years ago. And when I first started, he said, hey, Junior, you need to treat everybody like you would your mom and your dad. And he's probably told me that 100 times. If I call him today, he'll probably say some iteration of that. And then he'll also say, son, remember, it's not what you did, it's what you're doing and what you're going to do. So that general mindset applied specifically to the task at hand and the person across the table, that's how I've been able to help folks. And hopefully that provides some momentum as we strive towards the future.
Now, by the way, if anybody has any questions, please ask them in the Q&A. We have a few more minutes for questions if anybody has any. And Scott, to sort of end, I'm curious if you found this same potential benefit from specializing in a certain type of client. What have you done, and especially earlier on in your career, is there a type of client that you thought would be well suited to your firm?
You know, initially, we really wanted to work with large businesses and do a lot of things like deferred comp. But it really came back to being, you know, if you're a business owner and you got to sell a product or a service, you have to have the market to do so. And we looked at this a lot when I was at my previous employer, and it never seemed to hit. So when we started Nobel Winslow, we knew that we had to really focus on what the market was here. And the market here is people who are retiring here. Some of them are business owners, some of them have businesses here that have assets between, you know, $500,000 and $10 million. So we started doing everything we could in our firm, from the way we invest, the way we talk, the way we build to their goals, the way that you do things like an RICP designation for that market. So our marketing that we do, the way that we build relationships with other professionals like lawyers and attorneys and CPAs, like how do we get to know them and they know our process, because our client is that mass affluent. It is the person that's dealing with either selling a business, preparing for retirement, withdrawal strategies, and maybe even complex elder care strategies, things that we have worked on. So we just focused on like, hey, let's be the very best in this market for what has the most client potential. I think if we move to another major metropolitan area, we would rinse and repeat and maybe do some things a little different. But here we're going to focus on that client.
Hey, we just got a question, which I think is one of the most difficult aspects of retirement planning. And I'd love to get your answer on it. You know, one of the most challenging aspects of planning for retirement, obviously you don't know how long you're going to live, but you also don't know what your expenses are going to be, particularly when it comes to healthcare and long-term care. How do you deal with those two big question marks when it comes to retirement income planning?
Okay, so what I do is when you're doing the different approaches, I calculate the retirement income plan without an event. And then I calculate it with a perceived event, and we calculate a net present value of how to fund it, and then find the best way, both tax-wise and with the most perceived way of efficiency to fund that liability. And that is a big difference when I see competing firms' financial plans. So we're going to go in there and say, hey, look, for 4 years between age 86 and 90, which is when most claims and elder care claims happen, we know that. I've sat with the insurance executives and actuaries. And so we actually go in and calculate it on an inflation adjusted net present value retire. You got a 70% chance that this is what the cost, your liability is going to be in retirement, along with the other stages of retirement, whether we're using a cash flow planning or income planning, or if we're doing a probability approach. So we just flat out calculate it and then show them, hey, if you buy a hybrid life insurance policy after you retire, this is how it's taxed, both on the front end and back end. This is what it's going to cost net. This is the internal rate of return. And we just analyze all the options. That's what we do.
Yeah, you know, I think that that's the right approach to take. I mean, especially when it comes to dealing with them with insurance. One of the questions is, you know, it's expensive. Why does it make sense? I often say, well, imagine that you have a group of 50 retirees and maybe 3 or 4 of them is going to have a very expensive long-term care experience. What's the right way to deal with it? Is it to have those 3 or 4 unlucky retirees deal with all of those expenses? Or is a better way to deal with it to have all 50 retirees chip in just a little bit, and then nobody has to worry about it? It is one of those sort of very expensive, low probability risks that oftentimes is best dealt with using some sort of insurance, whether it's long-term care insurance or an insurance that's associated with a financial product. All right, I think we're getting towards the end of today's session. I wanted to thank everybody for joining us today. I really had fun in this conversation. Thank you so much to you, Heather and Terry and Scott, for joining us today. I also remember the American College has multiple designation programs that can help you build your specialized knowledge in financial planning. Thank you again, everyone, for joining us today for this conversation, and best of luck to you in your practice.